I'm Sarah Borkson-Keto here in New York for REIT Week 2019, NAREIT's Investor Conference. I'm joined today by Ramin Kamfar, Chairman and CEO of Bluerock Residential Growth REIT. Welcome, Ramin.
Hello, Sarah.
As US demographics and housing preferences evolve, what changes do you see on the horizon for the residential REIT sector?
I see tremendous opportunities for the residential REIT sector. There are two changes going on. One is secular. As we move from an industrial economy to a knowledge economy, careers are getting shorter. Kids graduating from college today are moving to markets where they want to live, and they're having 5-year careers as opposed to prior generations that had 30-year careers and more stable and more higher propensity to ownership. Today, it's a much higher propensity, especially for the knowledge worker, highly educated, highly compensated, much more propensity to rent. And that's tremendous opportunity over decades for the residential sector. The other piece is demographics. The millennials are obviously a huge generation at 90 million, much bigger than the baby boomers. They're in their prime renting years. They're getting married later. They're having families later. They have much higher propensity to rent. And it's not just the millennials. Behind them is the Gen Z, which is 82 million. And then the next piece is the baby boomers that are 72 million, and now they're coming out of houses and moving into multifamily. All of this will take place over the next couple of decades, and it creates tremendous opportunity for the residential REIT sector.
And what sorts of acquisitions do you see on the horizon for the end of this year?
Well, we've guided towards $500 to $700 million in acquisitions. You'll see us in some of our existing markets. We're big fans of Florida, so you'll see us increase our exposure there. We're working into some new markets. We're re-entering Nashville. We sold Nashville out a few years ago when we thought that prices had peaked, and we're getting back in at similar or better prices 3 years later. We're big fans of Vegas in terms of the experiential economy. I think Phoenix is a market that you'll see us in. It's a Silicon Desert. There's tremendous growth in terms of population and employment there that's going to drive residential. So those are some of the markets that you'll see us in this year.
And can you talk about how Bluerock funds growth opportunities in a continuously low-cap environment for multifamily?
Well, we look for something specific, and we have a value creation program. The specific asset we're looking for is a great market, great sub-market, but an asset that's maybe 10 to 15 years old. It has the right bones in terms of the build-out and the amenities and the ceiling heights and so on and so forth, because you can't change that. But if you take it and you amenitize it and you create a live, work, play, socialized environment by upgrading the units or upgrading, for example, the swimming pool or putting in a dog park, you can drive rents in those units. We're looking for units where the brand new product that's surrounding it is getting $500 more rents, and we can get in at a discounted price into the asset, and by doing the upgrades, push rents up $200, $300, $400, and that drives tremendous value for the REIT and for our investors.
Great. Thank you so much for joining us today.
Thank you, Sarah.
Thank you. And for more on REIT Week 2019, be sure to visit REIT.com.